Hello and welcome to our Venture Capital, Growth Equity, and Startup Modeling course. Now, I know that you probably want to jump into the case studies and the Excel exercises here right away, but I do want to take a few minutes to explain this course first. This is especially important if you have limited time or you need some type of crash course plan where you can complete the course or the most useful parts in a few days or a weekend. So I'm going to cover those points in this lesson and explain some of the prerequisites for this course and also how it's different from some other venture capital and growth equity training that I've seen. When you finish watching this or even reading the slides, you should have a good sense of what to do next, whether it's going back to our Excel or financial modeling training, or going through this course from start to finish, or just picking specific case studies to complete in this course, especially in Module 1. So here's the outline for this lesson. I'll start with the course prerequisites first, then we'll go into the weekend crash course plan and some other options you have for completing the material here. Then I'll talk about how this course is different from others and why we specifically don't cover some topics that other courses and training focus on and why we focus on other things instead. And then I'll go into some recommended reading and outside resources if you want to learn more about topics that are not covered explicitly in this course. I'll start with the course prerequisites. Overall, you should have at least an intermediate knowledge of Excel, accounting, and valuation. You don't need to know anything about VBA or Python or other programming languages. You don't need advanced financial modeling skills, and you don't need to know that much about merger models or leveraged buyout models, LBO models. I would say just the basics here are enough. We will touch on these in parts of the course, but it's not going to be a key focus here. This means roughly that you should know modules 1 through 3 of the Excel course, which are about shortcuts and navigation and basic formulas. And then in the financial modeling course, modules 1, 2, 4, 6, and 7, which are about accounting, 3 statement models, equity value and enterprise value, and DCF analysis. In case this isn't clear, let's go through this and do a few quick tests. So first off, if I gave you a company's annual report, would you feel comfortable building a simple discounted cash flow or DCF model based on its unlevered free cash flow? Do you know what unlevered free cash flow is? Do you know how a DCF is and what it looks like? I'm going to pull up a finished example here. This is from our financial modeling course. We're starting with revenue, going down to operating income, calculating NOPAT, adjusting for non-cash charges, and calculating unlevered free cash flow. This is for a steel company, but the question is, would you feel comfortable creating some type of projection model like this for another simple company if I give you its filings and annual reports? Another quick test is whether you understand these Excel formulas. Here's one based on the XLOOKUP function, and then here's one based on the SUMIFS function. Now, I'm not going to tell you exactly what these do. It's really for you to look at it and be able to tell. But if you can understand these at a high level and at least what they are attempting to do, you should be okay with most of the formulas in this course. If not, if you've never seen these, if you have no idea what these are doing, or for example, why we need double quotes around the greater than 0 here, then you should probably go look at our Excel course first. And then finally, a quick test number 3. Can you navigate around Excel efficiently? So I'm going to demonstrate this right now. And I'm going to pull up one of the models in this course. So here I am in the top left corner. I'm going to skip around using some Excel shortcuts right here. And then I'm going to highlight this whole area. And then I can go in and delete this whole thing. And then I can undo it. And then I can jump up and go over here and highlight more of this area and then turn everything to bold and italicize it and underline it. And then I'll undo all those changes. Now, I just did all that without using the mouse at all. If you can do all of that, maybe not as quickly as me, but if you can do all that without using the mouse and you know all those keyboard shortcuts, you should be in good shape to continue with this course. If you don't feel comfortable with these tasks and shortcuts and formulas, you should complete our Excel or our core financial modeling courses first, depending on which area you need the most work in. You could also try to learn these points yourself via our free content on YouTube, which I've linked to here in the finished slide deck, or on our knowledge base, or you could read books, or you can complete other people's training. It's really up to you, but you need to know at least about these topics and feel comfortable with them to get something out of this course. Let's go to point 2 now and talk about the study plans. This first module of the course is about 6 hours of training, and it's really designed to be your crash course to venture capital and growth equity. We cover a seed stage case, so in other words, a very early pre-revenue company, and then we go through case studies for Series A, Series B, Series C, and Series D investments. If you have a few days or a weekend to prepare, complete Module 1. It's specifically designed for this. Each video is not that long, maybe 10 to 15 minutes on average, and they're specifically designed to get you up to speed quickly on these topics. If you have more time, you can go past Module 1 and complete some of the more complex case studies. We have additional case studies on an early stage company, a late stage company, one that focuses more on the valuation side, one that focuses more on the exit modeling and the best exit option for a company, and there will be others in the future. So go through that and pick the one or the ones that are the most relevant for you. Now, if you have very limited time, you can only complete one or two of these case studies, you only have hours to prepare, I would recommend the following. If you're focused on early stage tech VC jobs, I would do the seed case based on this fictional company, PitchBook GPT, and then the Series A case based on this other fictional company, Muscle Frost. For late stage tech VC and for growth equity, I would recommend the Series A case study on Muscle Frost and the Series D case study on this software company, Procyon SA in Europe. This is actually a growth equity case study, so it is 100% matched to the growth equity job and interviews. And then finally, for life sciences VC, regardless of the stage, I would do the Series A case on Muscle Frost because you'll learn about cap tables and valuation and exit modeling from that. And then I would do the Series C case study on this company, Antios Therapeutics, because it is a life sciences case and you'll learn more about some points that are specific to these healthcare related companies. Let's now go to how this course is different. Now, I'm not going to mention any names here, but there are other training options from various other companies out there that have Wall Street or finance or related terms in their names. This course, though, is different because it focuses very heavily on case studies and investment recommendations, not term sheets or definitions of items and deals or things like that. We do include cap table coverage, and we have a lot of lessons related to capitalization tables and modeling option pools and exits and preferred and participating preferred and liquidation preferences and all that, but it's always in service of the case studies. When you finish this course, or at least some of this course, you should be able to complete qualitative and Excel-based case studies and present them effectively. The reason why we don't cover term sheets in much detail here or at all is because I feel they're best covered in books and written material, not videos. There really isn't much to say because you don't directly go through them in Excel. You read and interpret them, and you may have to use parts of them in Excel, but it's more of a legal or written task. It's also not a very likely interview or case study topic. We collect case studies for VC and growth equity interviews, and I've never once seen someone get a case study about analyzing a term sheet. So if you go in for an interview, they're not going to say, read this Series A term sheet and tell me about the anti-dilution provisions and the drag-along rights. It's not really something you have to concern yourself with, and it's something you could easily look up and analyze online if you had to. The more likely question is they will give you a description of a company, its market, its financials, and say, would you invest at a $20 million valuation? Why or why not? And that's what we focus on here. Now, I just said that we don't cover term sheets in much detail, so if you want to learn more about that topic or about other things that we don't go into, such as the qualitative side of deals and how to actually raise money or how to pitch your company or things like that, I would recommend the following. Venture Deals by Brad Feld is an excellent book, probably the best one that I've ever encountered on this topic. I have a lot of highlights in the book. You can see here, I probably have hundreds of highlights on my Kindle app here, and I'm just reading this section on the pay-to-play provision, but it's a very, very good reference, probably the best one I found. Also, there's this other one, Venture Capital Deal Terms. I've linked to both these here. This one is good because it has more coverage of venture capital deals outside the US, and it goes into differences in some European countries. But these would be my top two recommendations. You can also find plenty of explanations of term sheets and definitions of terms online, but you're not going to find nearly as much in how to approach case studies and make investment recommendations, which is why that's our focus here. That's it. So let's do a quick summary. Course prerequisites. You should know Excel, navigation, shortcuts, and basic formulas, and you should know accounting, three-statement modeling, and valuation and DCF analysis. So a few modules from our Excel course and main financial modeling or core financial modeling course. If you have a weekend to prepare or a few days, just complete module 1 of this course. If you have even less time, focus on maybe 2 of the case studies depending on the time you have, either the seed and Series A one or the Series A and Series C one, or maybe the Series A one and the Series D one for growth equity. This course focuses very heavily on case studies and investment recommendations and not so much on the term sheets and explaining details of each individual deal. If you want more on that, I recommend this book by Brad Feld, and then you can go back and look at the other one I recommended with more of a European focus if you are in Europe or another country and you want to learn more about that. That's it for this lesson. Coming up next, we'll get into our first case study here based on this seed round investment in this fictional company, PitchBook GPT, and you'll learn how to do a quick analysis and make an investment recommendation.